Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do price action analysis unbiasedly, and I hope you guys had an amazing Christmas weekend, y'all. But we got another week of trading coming up and we gotta get prepared. The market has been chopping for this past week. Despite this chop, we did get some very nice intraday movements. If you're day trading this unbiasedly, got some very nice move to the upside, to the downside, but overall market has not been picking a direction. But with the last week of December, the last week of 2022, this week, can we get that Santa rally that people have been talking about for quite some time? Okay, as always, Uncle can't answer that question, but I know someone who can, and that someone is the Shepherd, aka the price action, and that's what we're gonna talk about in this video unbiasedly. Let's go. So as y'all know, I'm gonna do the bull case scenario and the bear case scenario. Uncle is gonna try and divide the truth evenly. All right, that means I'm gonna be unbiased about this and try to keep us prepared for either scenario. Okay, the bull case scenario and the bear case scenario. Now I want to go to the 15-minute chart, and you can see Friday's price action was pretty choppy. Okay, pretty choppy. It opened just below the 380 support resistant level and opened just above the 378. We got a bounce there. It from support cleared the 380. It went as high as 383 towards the end of the day, which was a resistance level. I had 383 to 383.5 resistance zone, but it could not break above that 383 level. Okay, so you can see here, you guys can see here that loss of this 383 level, that's this green trend line that I have, triggered a very nice move to the downside. Okay, so when I see big candles like this, big body candles like this from us, after breaking down a support level, to me, that's a sell zone. Okay, because the selling pressure started right there, and you know who moves the market? Not us, not retailers, market makers. They move the market. They have the liquidity to move the market, and this was a strong sell zone which pushed the market all the way down as low as 374.7ish. And you can see on Friday when the market tried to pull back up, it could not break that 383 level, aka the sell zone. All right, so bull case scenario starts with clearing 383. When we see a level act like a resistance, acting like a strong selling zone, and then it switch roles and become a buying zone, that's bullish. All right, so bull case scenario starts with clearing 383 to 383.5 zone. Now the next critical resistance I'm watching, all right, I have fib levels from October low to December high, and the 38.2 fib level is at 386.66. Bulls got to recapture that level, give us a false breakdown of that level. All right, recapture that. We can put the 50 daily moving average in play. Okay, I have a level at 388, the 50 daily moving average at 387.84. As you guys know, it changes every day. So 388 is the next critical resistance level above 386.6. And above that is 390. Gap fill around 390. If we can recapture 390, obviously that will be bullish. And put up the targets in play. 392, 393.5. Now, and the next critical resistance above those levels would be the 23.6 fib level at 395.7. All right, guys. When do we look for calls? When do we go long? Breakouts of resistance. Okay, like now, for example, this breakout of resistance right here for 380 level, you want to enter as close to it as possible, as close to the breakout as possible. Now let's say you missed the breakout, you can use the back test and go strategy. What does the back test and go strategy mean? Is for the bull side, when we break that resistance, we want to see that resistance level get treated like a support. So you see right here on the 11 o'clock candle back on Friday, after we broke out 380, it tested 380 as a support. That's where you want to enter for longs. Okay, it's the same idea in reversal. It's the same idea in reversal. All right, for the bear case scenario. Okay, so let's talk about bear case scenario. So if SPY continues to defend 383, If it opens where it's at now or where it closed Friday, I want to see breakdowns of support. 382 and of course that critical 380 level. All right, we tried to break down 380 many times last week, but it kept recovering, couldn't hold. So we need to break down 380. Remember, the more support get tested, the more weaker it gets. So the more we break down this 380, it's less likely to recapture again. All right, so bear case scenario begins loss of 382, but definitely the loss of 380, the loss of 388. Now let me go back to the smaller time frame. You guys can see here that 388 level, that's this yellow line right here, has served as strong support. All right, we give it a zone. I usually give it a 50-cent zone. I've mentioned it a lot in the Discord, but the support is 378 to 378.5 zone. All right, you guys can see here in that zone, bounce, bounce, false breakdown. We broke it down but recovered after bouncing from another support level. Bounce again on Friday. All right, so market clearly recognizes that 378 to 378.5 zone. If we can break down 380, we need to break down that level, obviously. Then break down 375.5 to 376 zone. We had a false breakdown of this level back on last Thursday, and it served us very well for a very nice trade to the upside. False breakdowns and false breakouts are my favorite setups, guys. In order to catch those trades, you got to know the levels. All right, so we lose that level. We can go back and test 374.7. That was the previous low. Also had a previous low at 373.6s. And then the next critical fib level is at 371.94. All right, that's the 61.8 fib level. If we lose that level, it's going to get a whole lot uglier. 370.4, 368.5-ish, and maybe a big drop back down to 361.5 to 362 zone. All right, guys. So bull case scenario starts by clearing 383. You guys got my bull case scenario. Bear case scenario starts by breaking down 382 and 380. All right. Moving on to triple Q. I have this trend line here. White trend line starting from October low to November 4th low and December 20th low. We broke it down on December 22nd. Last Friday, we tested it, back tested that breakdown level as a resistance. That's usually bearishness when we see a previous support level change its role and act as resistant, okay? But we still can watch out for the false breakdown setup. That means to be bullish, triple Q must recapture 269 to put 271.5 and 273 back in play. All right? Bull case now starts with recapturing this trend line here at 269, 269.5. It's giving some buffer. But as long as we're below 269, I recommend staying bear bias. This breakdown holds. All right? Breakdowns are bearish, guys. All right? Below 269, stay bear bias. All right, we go test 263, 262-ish maybe, 259-ish, and maybe back down to 254 to 255 zone. All right? Above 269, I favor 270.5, 273. Maybe we go test 274.6s. Back to 276 and 277.4 levels. All right. Dow Jones. It recaptured a level that I had at 330.8-ish. Needs to hold that level. Show follow through. Recapture the 23.6 fib level at 333.68. Recapture that. False breakdown setup. I actually would swing calls or swing longs if that level is recaptured, okay? Now back below 330.87, that's a false breakout setup. And at 328.5, we had some decent buying pressure from there on Friday. So if that level was lost, that would be very bearish. 324 to 325 zone back in play. I would swing puts below 324.5 actually. All right, favoring a test of 320.3, 317.4, and maybe even a drop back down to 314, all right? Tesla, I've been telling people, please do not catch this falling knife. If you are, good luck. And boy, if you did do that, luck was definitely not on your side. Uncle mentioned, we lose that 134, 135 level, you could go test 126. Tesla did it worse than that by dropping to the 121 levels, okay? So, and it's below that 126 level. I can't get bullish on Tesla unless it recaptures some resistance levels, guys. So please, don't try to catch this falling knife until we see some evidence of some buying pressure. That starts with recapturing 126.65, putting 133, 136, and maybe even 140 to 141 zone back in play, guys. All right? Stay bear bias below 126.6. 121 is next support with 117 and 113 below. All right? Apple got some bounce around the 129 to 130 zone. It needs to show follow through, recapture some resistance levels starting with 132.6, 133.8, 136, 137.5, and 139. All right, we got some decent buying pressure went from that 129 to 130 zone. If it fails, it's going to get much more ugly. We could drop down to 126, 125.5 zone, and below that would be 122.3, okay? Let's look at some inverses. Here's the VIX, still looking bearish. As long as below 22.7, I'm bearish. Next support is around 20.3. 19.4 is 18.95, okay? Can't get bullish on VIX until it recaptures 22.7 with 23.5 and 25 above. DXY is lingering around my my level at 104.3-ish, okay? That's a fib level. If I zoom out, go to a bigger time frame, 1 week. All right, you can see here I started from March 2008 low up to the October 2022 high, okay? And that 104.3 is a 23.6 fib level. That's where DXY is battling at right now. Obviously, it needs to stay above that level. Preferably recapture 106.7 to be bullish. All right, so loss of 104.375 would be very bearish on the DXY. All right, guys, let's end this one. Let's end this with the option flow. Got a sign in right here. I thought I was already signed in. And then of course I'm gonna look up some historical data. Here I can put the dates in. I'll look up from last week, December 19th. And I'll look up from last week, December 23. Okay, so I'm gonna look up last week's data. I'm gonna pick SPY. I'll filter it for 500K premiums or above. And I'll look at above the ask. So look at the most aggressive plays they did for last week. You see, overall, the most aggressive plays that the big money players are doing are bearish positions. You can see a lot of their puts are for early next year, January 20th, March, February, April. Okay, so yeah, there are some calls coming in. Got a 395 one here, strike price for December 30th. So somebody's very bullish for this week. But yeah, in the medium term, at least for next month, not for this week, but for next month, we're seeing a lot of bearish bets for the SPY, okay, that the market makers did last week. Looking at QQQ, 71% in the puts, okay. Now, very similar to the SPY, you see a lot of the bets, to the downside are for mid-January, mid to late January, early February. Okay, so it's all early 2023 is bearish. However, we do got 269 strike price, December 28 expiration, and it was in calls. Okay, so at least for this week, for SPY and QQQ, big money, it's bullish on it. Tesla, big money continues to be bearish on Tesla, especially seeing lots of puts coming in for January next month, guys. Yeah, overall bearish for Tesla as well. Apple, very bearish, 100% here. These are the most aggressive plays and 100% puts. 130 strike price, 125, 140. Yeah, for January and February. Okay. Let me see. DXY. Anything? Nothing as usual. Dow Jones. Nothing. And let's end this with the VIX. They didn't do nothing last week, at least not for aggressive plays. Anything worth looking, in my opinion. Okay, guys? So thank you guys so much for watching. If you want more content, from Uncle Charters, please consider joining my Discord. Other than that, thank you guys. Enjoy the rest of your holiday. Peace.